All right, and next, the great benefit of this conference is it allows us academics to touch grass, and so Kenneth's going to tell us how much of this is real now.
Thank you.
Good.
Appreciate it. Good morning, everyone. Let me start by just saying I've learned a lot. Had to read through 184 pages of work. And I will tell you I was very impressed. So Jeff, Christina, Tom, thank you for the work that you're bringing to this industry. We are grateful, and I want to say thank you to the Federal Reserve for hosting this. Governor Barr, good to see you. Thank you for being here. President Alberto, thanks for having us. And want to thank you, Ken Hinkey, for inviting me from the great Federal Reserve there in Minneapolis. And I've got one of my regulators here, Aaron, raise your hand. Let's go. There in the great state of Michigan, where we believe in pure Michigan. So, and I also have, by the way, Tom, a couple of my colleagues are here from the American Bankers Association. We represent all banks, so we're all around. Just want you to be aware of that. Let me get started. I think I've used probably close to 40 seconds of my time by just saying, John, thank you for moderating this and our presenters today again for your sharing. I'll hit some of the highlights, but I'll also try to hit some of the things we should do as regulators, things we should do as policymakers, as bankers, and as academia today. And so I'll try to walk through this. I won't walk through all of your comments, but I'll try to capture the essence of some of those. But what we really know is that small business is enormous to us, and each of you, I think, have alluded that. But there's a gap of access, of credit, of opportunity. It's a gap that innovation and policy must focus on closing. In this discussion, I will repeat suggested what the Fed, academia, and policymakers should do. Jeffrey, on your paper on AI, let me begin again. According to the Census Bureau, you talked about the 14% and the 43%. These banks, relative to non-AI using banks, lend significantly more to distant borrowers, including in poor and rural areas, with less bank branch penetration. And they do so with lower default rates and even somewhat lower interest rates. So thank you for bringing that to our attention. What does this suggest for the Federal Reserve, academia, and policy? For the Fed, monitoring and guiding transparency and AI deployment is vital. If AI is helping reduce information asymmetry, we should promote frameworks for validating those effects, ensuring risk is controlled and bias is mitigated. For academia, this is a rich opportunity for longitudinal studies. How do we differentiate AI in models and how they perform over time? What are the trade-offs between accuracy and what we interpret? And how does AI affect underserved communities specifically? For policymakers, consider incentives, tax, grant, regulatory relief for banks that deploy AI tools in ways that demonstrably increase access to underserved areas. For instance, in places where fewer branches or higher minorities live. Meanwhile, for bankers, adopting AI isn't just up with technology. With smart execution, it's a tool to expand markets, reduce costs, and reduce credit risks, especially in borrowers formerly out of reach. Regulation underserved in areas of technology. Christina, your paper. The FDIC Small Business Lending Survey from 2022, as you noted, showed that banks use financial technology tools to varying degrees. Fintech competition is growing. In the same period, SBA lent over 38,000 7A loans under $150,000, mostly small dollar loans, double from 2020. Lending to underserved entrepreneurs has increased. Average monthly SBA lending to Black-owned businesses has tripled since 2020. Latino and women-owned businesses have seen more than doubling in certain metrics. What should the Federal Reserve, academia, and policy makers do? For the Federal Reserve, should ensure the regulatory environment supports safe innovation, e.g., sandbox programs clarify new data or models are evaluated for compliance with fair lending. Academia, measuring how new regulatory regimes or fintech innovations are affecting access, pricing, default risk, and whether some borrowers are still left behind. On the policy front, we need to include SBA programs, grants for banks, especially smaller community banks in rural areas, and adopt AI or open banking technologies or matching funds for those serving low-income, rural, and minority communities. Data open banking and data as collateral, Tom. Only about 16 to 18% of small businesses and SMEs have adopted open banking. As you saw, again, Tong made reference to what's happening around the world with open banking. We will tell you, as you stated correctly, banks have been opposed to open banking because of reasons of understanding some of the issues that Governor Barr brought up earlier, fraud. The concern of how that information can be used and will be used. It needs to be blocked and tackled in such a way that all of us can have a lot of faith and trust in the system. So what should we do for policymakers and regulators? Consider standards for open banking that protect privacy while ensuring firms can share their financial data securely with lenders. Think about a regulatory framework that allows data as collateral, or at least database underwriting. For academia, research needs to test the predictive power of non-traditional data, cash flow, supplier and invoice data, and digital footprint. Also, we need to understand the risk and bias of privacy violations. For banks, community banks can build or partner to access platforms and understand AI and understand how this information can impact our businesses going forward. Let me try to synthesize all of this real quickly, putting it all together. Closing the AI adoption gap. Small businesses are catching up, e.g. AI usage among small firms rising from 6.3% to 8.8%, but is still low. Policy leverage works. SBA data shows that targeted policies, small dollar loan promotion, support of underserved groups, including numbers of Blacks, Latinos, and women-owned businesses have surged. Speed and trust matters. According to the FDIC, 3 in 10 banks, including more than half of the large banks, can approve a small and simple loan within 1 business day. That's progress. But for many small businesses, delays and uncertain credentials remain major barriers. Our call to action. I have a lot of optimism for this. The data shows what's possible. Increased lending to underserved groups, AI reducing asymmetry, open banking promising to unlock new credit channels. The tools exist. Many small banks are starting to use them, but we got to create an environment where all will begin to use them. Urgency. Because without intentional policy, research, and investment, these opportunities may remain uneven and even exacerbate inequality. AI amplifying historical biases and digital divides, leaving rural and non-tech firms behind, is certainly a concern we should all have in mind. So my call to action for each of the groups, Federal Reserve and regulators, help build clear standards, oversight, and incentives that reward inclusion and responsible tech use. Consider pilot programs and regulatory safe harbors for banks experimenting with new data and underwriting models. Academia, continue your rigorous approach in evaluating, sharing, research, and developing papers that can certainly help us move forward. Bankers, embrace innovation, but anchor in your community mission. Seek partnerships, experiment with AI, open banking, and data-driven underwriting. Using your strengths, trust, relationships, and local knowledge along with all of these tools. At this point, I'd like to show a slide that really shows the importance of the variety of banks that we have in the ecosystem. What you see here, of course, this is a Federal Reserve 2025 Small Business Credit Survey, and it shows the satisfaction that individuals have across the strata, from online lenders up to small banks. We believe that there is a need and a welcoming for an ecosystem that really looks at a variety of banks, from small banks even into lenders, but we see the impact that it has in the local community and the satisfaction. I grew up in a small rural town. My first banking opportunity came when I needed a loan and didn't have collateral. And a guy who I'd gone to high school with was able to make that loan to me. And so I know the importance of those small town relationships. And so I'll close by saying, this is important. We need to get it right. Technology isn't just about efficiency. It's about justice, variety, and economic growth that lifts all of us. Thank you very much.